Hi, this is Indraneel and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In first news, Reliance Consumer to invest up to 8,000 crore on capacity expansion for Campa and other beverage brands. Second news we have Skoda Auto Volkswagen to invest additional 1 billion euro in India for expanding their operations. Third news we have Vodafone Idea join hands with US-based AST Space Mobile to offer direct-to-device satellite broadband connectivity in India. Fourth news we have deep tech VCs across the globe are raising fresh funds to invest in India because of favorable geopolitical landscape. And fifth news we have public market bound urban company posted 240 crore as net profit for the period of 2024-25 financial year. In first news, Reliance Consumer to invest up to 8,000 crore on capacity expansion for Campa and other beverage brands in its portfolio over the next 12 to 15 months. Mukesh Ambani owned Reliance Consumer Products is adding nearly 10 to 12 new greenfield and co-packing plants to step up its challenge not only against large rivals Coca-Cola and PepsiCo but also against dozens of low-priced regional brands across the country. In February, Reliance set up a plant in Guwahati along with local partner Jericho Food and Beverages LLP to manufacture soft drinks and water and cater to the Northeast region, while their other facility is coming up in Bihar. Reliance Consumer's beverages portfolio include Campa Cola, Orange and Lemon, Socio Soft Drink, Spinner Sports Drink, Suncrush Juice, fruit-based hydration brand Ruskik and Independence Water. Reliance Consumer has partnered with former Sri Lankan cricketer Muthaiya Muralidharan to co-create, manufacture and sell Spinner Sports Drink at ₹10 for 250 ml bottles, which is less than half of the price of rivals such as PepsiCo-owned Gatorade and Sting. So far, Campa and other beverages are being manufactured in 18 plants, and all of these plants are with co-investments. The company wants to ensure its consumer portfolio is available nationally by March 2027 with about 70% availability by March next year for categories such as beverages. Reliance has priced its cola, sports, hydration and juice drinks at about 20 to 40% lower than Coca-Cola, PepsiCo, Tata Consumer Products and Dabur, forcing the incumbent to accelerate consumers' promotions, trade margins and introducing more smaller, lower-priced packs selectively. India's beverages industry, which includes carbonated soft drinks, juices and water, is estimated at 67,000 crore and expected to touch sales of 1.47 lakh crore by 2030, when in financial year 2025, Reliance Consumer reported revenue of 11,500 crore with Campa and Independence crossing 1,000 crore each in sales. In second news, Skoda Auto Volkswagen to invest additional 1 billion euro in India for expanding their operations. Skoda Auto Volkswagen India Private Limited has received in-principle approval from its German parent to invest an additional 1 billion euro, that is about 10,000 crore, for expanding their operations in India, when under its new India 3.0 roadmap, the world's second largest automaker will sharpen focus on the fast-growing premium utility vehicle segment in the country, including SUVs and electric vehicles. The fresh investment plan tracks a period of indecision within Volkswagen due to lower than expected sales from its current lineup of India 2.0 models, which include the Kushaq, Slavia, Taycan and Virtus. The delay in finalizing the investment was partly due to the issues within the Volkswagen Group, while in last September, Volkswagen said it would shut at least 3 factories in Germany, lay off tens of thousands of staff and shrink its remaining plants as part of a deeper than expected overhaul. Unlike its current plan, which focuses on volume models, India 3.0 will target premium SUVs and MPVs across electric, hybrid and internal combustion engine, that is ICE variants, when vehicles under India 3.0 will be based on the CMP21 platform, which is an affordable EV architecture designed for India. In India, the Volkswagen Group comprising Skoda, Volkswagen, Audi, Porsche and Lamborghini brands is also looking to increase operational synergy, which includes starting the assembly of Porsche cars in India. When in 2024, Porsche crossed the 1000 unit sales mark in India for the first time, with plans now underway to assemble several models from completely knocked down kits excluding top-end models like the 911. In third news, Vodafone Idea joined hands with US-based AST Space Mobile to offer direct-to-device satellite broadband connectivity in India. Vodafone Idea has become India's third telecom operator after Reliance Jio and Bharti Airtel to join the race of Satcom, that is for starting broadband from space services, and for that purpose Vodafone Idea is tying up with US-based AST Space Mobile when their space-based cellular broadband ecosystem will be designed to expand its telecom services of terrestrial connectivity, providing voice, video, data streaming and internet access. Nasdaq-listed AST Space Mobile is building a constellation of low Earth orbit satellites that connect directly with standard mobile phones without the need for specialized equipment, where UK-based Vodafone Group, which is a co-parent of Vodafone Idea, is an investor in AST Space Mobile and is collaborating to set up their first space-based mobile network. When the first 5 commercial satellites have been placed in orbit successfully last September, with plans to have over 50 satellites in the coming years. As per rules, any company offering satellite services in India needs to establish its gateway locally and route all its data through these gateways. Vodafone Idea will now need to secure a Satcom permit for starting Satcom services, unlike other Satcom companies like Starlink and Amazon Kuiper, which need a terminal to access broadband. AST Space Mobile partners with mobile operators to offer connectivity on the devices of users directly without any need for additional equipment. With this, Vodafone Idea will come with the competition not just its two bigger domestic rivals Jio and Airtel, but also Elon Musk-owned Starlink and Amazon Kuiper in India's nascent Satcom market with high growth potential. And through this partnership, Vodafone Idea and AST Space Mobile will collaborate to develop commercial offerings for diverse sectors including consumer, enterprise and IoT. In fourth news, deep tech VCs across the globe are raising fresh funds to invest in India because of favorable geopolitical landscape. Indian deep tech funds such as Spatial Invest, IdeaSpring and Mela Ventures are raising fresh funds to step up investment as more companies come in this space on the back of government initiatives, favorable geopolitical landscape and rapid technological advancement. When Java Capital is looking up their fund size of 50 crore to 250 crore, while Bharat Innovation Fund is looking to raise 150 million US dollar, that is about 1290 crore for their second fund. Navam Capital raising its maiden fund of 30 million US dollar or about 258 crore. Mela Ventures had raised 320 crore in its first fund. Spatial Invest had closed their third fund when IdeaSpring Capital and Mela Ventures are raising their third and second fund respectively. The deep tech ecosystem in India is seeing a growth momentum with several startups in sectors like artificial intelligence, space tech, semiconductors, robotics and climate tech, which is increasing the competition for early stage deals when investment in deep tech doubled in first 4 months of 2025 to 324 million US dollar across 35 deals against 156 million US dollar from 21 deals in the same period last year. The current geopolitical situation is playing in favor of India's startup ecosystem when India is a top choice for global deep tech investors from the US and Europe, with many favoring India over China and Israel. While investors are more open than before, raising funds is not easy as deep tech has a longer gestation period and fewer examples of successful exits. And in fifth news, public market bound urban company posted 240 crore as net profit for the period of 2024-25 financial year. The Gurugram-based at-home services platform Urban Company, co-founded by Abhiraj Singh Bhal, Raghav Chandra and Varun Khaitan, reported a 38% increase in its operating revenue for 2024-25 to 1,144 crore and posted a net profit of 240 crore against a loss of 93 crore in the previous financial year. The turnaround came on the back of a 211 crore deferred tax credit. However, even on a pre-tax basis, the company reported a profit of 28 crore. In 2024-25, the process-backed startup had a monthly average of around 47,800 active service professionals on the platform with 6.8 million annual transacting consumers. When the company plans to drive growth by deepening its presence in existing cities, expanding to new markets, cross-selling services, launching offerings like Insta Help and scaling up product-led solutions under its native brand. The core service offerings from the company, that is home and beauty services, continue to grow, which is providing the company with the capacity to invest in the expansion of newer categories. So these are the top 5 business news from Business Bytes in our channel The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.